and we want to head on over to speak with Dan Wang. She is China Director at Eurasia Group. So Dan, thanks for your time today. China's Q4 and full year GDP there really coming in line with what was expected. Your thoughts on those latest numbers?
Well, even for Q4, with the deceleration of investment in infrastructure and manufacturing, the full year performance is quite nice. And the Q4 has actually beaten the expectations for many of the forecasting agencies onshore. So this is a clear message that Chinese government is able to keep the economy on track despite of the internal and external challenges. And we expect the economic momentum to continue in 2026.
Yeah. I want to know, though, for the full year, I mean, to what extent does this reflect genuine momentum versus front-loaded growth? Because we did, see a much stronger first part of the year. And I also want to know how trade tensions, the structural imbalances are going to factor in this outlook.
The trade tension really did a number on China in Q2 and Q3, but most of the Chinese manufacturers who have survived the Liberation Day tariff episode had more orders in hand than they can handle. So in Q3 and Q4, we actually saw this outperformance in export sector. And throughout the last 4 years, there was actually this structural underestimation of China's strength in both exports and supply chain. So I think in 2026, export will once again be the growth engine for China, not domestic economy. If you look at those numbers, there's a fundamental weakness in domestic consumption, in domestic investment. This over-leveraging model as driver for China's growth has essentially ended. But reliance on export also means China's economy will have to get more access in the overseas market, especially developed economy like Europe, and even in the US, Chinese manufacturers have to try harder to get into that market.
Yeah, and so the point is that the exports are likely to continue to support and not the domestic economy. And I wonder what this means for then the growth outlook for 2026. I mean, what could this figure be? And what would China need to reach that target?
2026 is a special year. It is the starting year of the 15th Five-Year Plan. It is also the 1 year before the 21st Party Congress. So all the economic target and social targets must be met throughout the year. We're not just talking about the full year target. It's essentially the first half of the year, the economic performance must be very solid. Second half, there might be a deceleration, but depending on the data, the fiscal response will be quite substantial if there is a major slowdown. So the housing sector still is the main drag for the economy. We have seen this faster declining in housing prices for tier 1 cities. That's a worrying sign. But according to a number of documents released from the central government, it is no longer a growth engine. And there's no intention from the central government to bail out the sector or the real estate developer. So the focus will really be on the productivity growth. So one thing I want to point out is that since 2021, when we think about Chinese economy, actually for the main drivers for the growth, that is labor, capital, and technology. But for labor, China has been having this demographic decline since 2021. And then for capital, the growth rate for investment has been slowing down and eventually turning into a contraction in 2025. So this 5% growth in 25 was almost entirely coming from the productivity growth. And this is quite a substantial milestone. And in the next 5 years, under the 15th Five-Year Plan, China is going to double down its investment in high-tech sector. And that means the feature of the economy will be an improvement in efficiency rather than a slowdown.
Right. And then before we go, I just want to ask a quick question on China's rare earth exports, which declined in December amid that spat with Japan. I mean, how does this shift change the economic stakes for China? I mean, China's dominance, of course, in rare earths has been a growth advantage, but in the longer term, I wonder if it could become a source of economic risk for the country, especially if other countries, really push hard to diversify.
Rare earth is China's most important choke point when it comes to trade negotiation with the U.S. and also with the trade tensions. When it comes to trade tensions with Japan and other economies, this is quite effective. There is a clear dependence on China's rare earth supply chain, and so far it hasn't caused major slowdowns for any economies yet. But given that China is getting into a risky territory when it comes to China-Japan relation, when it comes to China-European relation, this issue will be brought up again and again. So for major industries that depending on China's rare earths, they have to try harder to lobby their government to develop alternative supply chain. And by then, maybe 5 years, maybe 10 years, it will become one of the main vulnerabilities for China. And that means China now will have to prepare in advance to develop other advantages in its supply chain other than rare earths.
All right, Dan, appreciate your time today. Dan Wang there, China Director at Eurasia Group.